And I'm very happy that Disrupt made this step and moved the whole blockchain community online. Because I think even in a time of crisis, we should not ignore education, and it's still good to bring people together. And today I'm going to talk again about AZHOS, about our prototype, and how digitization will change the German industry. Especially in times of Corona, we see we are now doing a webinar instead of a regular meeting. For example, maybe at the Frankfurt School or whatever, we are now doing this online. And this step towards digitization is not only a topic for the consumer market or, for example, for the communities or networks, it's even a topic for the German industry. What we with AZHOS have been doing for a long time is trying to automate supply chain finance. And to know about our business model, it is very important to take a look at the industry at first. In the current market environment, everybody right now is talking about all these buzzwords, Industry 4.0, Internet of Things, digital transformation, of course, blockchain. Again, this is a blockchain presentation. But in the most cases, all these buzzwords don't really mean that the industry already adopted all these technologies. There are always all these cases where people are trying to explore these technologies, but none of these has already made the step into full adoption over multiple industries. And to give you a short example about what we've been doing and what we've been encountering in the last years, it's basically we've been working together with a chemical plant near Friedrichshafen. And we were basically asking them, how do you track your inventory? It's a simple question. And basically they told us that we have sensors, but these sensors are as good as they are old. So basically they're not functioning anymore. They are too old and they never have been calibrated. And therefore the whole system does not work. So our question was, okay, if these sensors, if they don't work, so how do you track inventory right now? And basically the chef at the plant, he took his phone, he called his intern, and the intern took a bike. He drove, on average, like 1.5 or 2 kilometers through the chemical plant until he arrived at the respective silo we wanted to know the inventory level from. He climbed on top of this silo and knocked against it. So like you knock against a glass of water, whatever, he knocked against it like 3 times, and the sound, as the lower he came, the sound got darker. So he went back, he typed into his Excel sheet, okay, I knocked 3 times, basically it sounded darker in the lower third. So basically I will tell everyone that there is 1/3 of inventory left in this silo. And this is not really an exemption. This is actually the main way of doing business right now, even in the high-skilled German market. But still, in the moment, all the industrial plants or all the providers in Germany right now, they fear China, because all the factories that are operating in Germany right now, they were built in the 70s and the 80s, and they have been running since then. This means that basically at the time the plants were built, the technology like sensors or data management system has not been available yet. It has not been developed yet to this point. And basically all the suppliers from China or from the Asian countries, they have been developing their chemical industry branch throughout the last 20 years. And this means that every factory that has been built during that time is now equipped with modern technology. And in order to keep up, Europe has to use this. Okay, and what is really important to understand what AZHOS in the end is doing is to understand the industry behind it. What I was telling you is not only specific for the chemical industry, it is general for the German market. But the chemical industry itself has way more problems, since all the goods in terms of supply chain management and supply chain finance are all the goods are in the most cases are bulk goods, or goods delivered in silos, in tanks, and that are very intransparent. If you have a package, you exactly know how many packages you have. You can track it very well. But if you have a silo, you first have to know what's in it. How much is this worth? What material is it? So this whole situation adds a lot of intransparency to all these supply chains. As well, the chemical industry is an industry with supply chains spread all over the globe, which means that in order to finish one specific product, there are several sub-suppliers connected into like a very tight grid of partners. And this means that, for example, payment terms are very, very high. People wait very long until they receive their money. And this can take up to 90 days. This can take up to 180 days. And this is crucial because most of these suppliers, they are middle-sized companies. Not every company is as big as BASF. Most companies are middle-sized, specialty chemical suppliers, and they really need their liquidity. And if they now have to wait 90 days until they receive their money from their customer, this can mean serious harm to a SME. So what in a normal industrial case, what would we do? We would go to a bank and ask for intermediate financing, supply chain financing, some sort of. And we would ask them, okay, I got this asset. This asset is connected to this silo. It's delivered at this point. I need a factoring. So you give me the money instantly. I have my liquidity. I pay you for this. And then the customer can pay after his normal terms of payment, maybe after 90 days, maybe after 180 days. But I don't have to care about it anymore. And this is very important because in the chemical industry, supply chain financing is very hard to get because you can only finance goods or assets that you know about and that you have a clear track of it. In a normal case, the only point in the supply chain where you exactly know how many goods with what value you have and where they have been shipped to is if you fill your truck. You'll fill your truck from your silos in your warehouse, and they go over a scale. The scale exactly measures how much material is on the truck, and you get a shipment notice or a delivery receipt. So you can use this shipment notice or a delivery receipt that is only recorded if the truck reaches the customer in the end. And then you can take this receipt and go to a bank and ask, okay, I need to finance this, give me factoring. So there are two problems involved with this. The one problem is that on the one hand, a truck can physically load only a maximum of 25 tons. This means that if a chemical plant has an output of 100,000 tons a month or millions of tons a month, you have in the end thousands and thousands of single shipment notices that are stating how much material was shipped. And since a bank normally has to recheck and validate every single one of these shipment notices, there is a lot of paperwork and administrative effort involved in executing this financing process. So the costs involved with this are very, very high because you have to check everything. And on the other hand, if you would measure it directly at the silo, you have the intransparency because you don't exactly know what is in the silo. Again, I can take the example with our intern. If I send my intern to the silo, he knocked 3 times, and now I go to a bank and tell them, okay, my intern knocked 3 times. He's thinking that there are 30% of the material left. This means that 70% of the material have been consumed by a customer. Now I need 30 million euros intermediate financing. This does not work because there are a lot of points in this measurement process where manipulation is possible. And as long as there is manipulation, it is not possible to do financing at low costs and at costs that are bearable by the suppliers or customers themselves. So what do we do about this? Basically, I wouldn't hold this talk today if I would have to tell you only about problems we currently have and no solutions. So what is the solution? We have been talking about blockchain all the time, and this is what Disrupt is promoting and helping startups with right now is blockchain technology. But do I really need a blockchain solution for this specific case? In the most industrial cases, the solution is no. I don't need a blockchain solution only to manage my supplies internally. I don't need a blockchain solution to enhance my ERP or SAP systems. But what I need a blockchain for is if this supply chain finance process is involved. Because supply chain finance, as I already told you, requires trust, it requires transparency, and it requires a smooth process between multiple parties. But actually, where you need a blockchain for is to create the trust needed in this system to perform supply chain financing. So basically, if I now change to the existing orbit model and I put a sensor in this silo that can exactly track what inventory was in the silo at which time, and I can basically automate this, the problem is that I still store it in a central database that is either controlled by the supplier or by the customer. So exactly, I have one party controlling the whole system. And basically this whole party could just, like, there is still maybe the intern and he can now type into his database what he wants, or basically he adds an additional 0 or he leaves 1 out. So basically there is enough room for manipulation. And if there is room for manipulation, banks normally don't want to finance in such cases. And this is basically why we need a blockchain. So what AZHOS is doing is basically moving from a trusted partner principle, which has been done by Orbit for a long time, to a blockchain-based system to improve this trust in this industry. And what exactly is the benefit of using a blockchain in this case? And it's basically that I can distribute the ownership of the data used for the financing. So basically, if I have a blockchain, I can basically run 2 access points, like they are called nodes, to the blockchain that perform the calculations. And basically, if I give 1 node to a supplier in a supplier delivery relationship and 1 node to the customer, this means that both of these parties have 50% access to the database, or basically to the data in this system. And there is no single party that can single-handedly manipulate this data. Basically, the supplier cannot manipulate inventory data without the customer, and the customer cannot manipulate data without the supplier. And since a supplier and a customer have very different interests, one guy wants to charge more and another guy wants to pay less. Basically, you have directly opposing interests. So basically, in this constellation, nobody really has the incentive to manipulate anything. And as long as I can prove this to a bank, they are now able to perform financing based on this data. And with the use of a blockchain, which serves as in this case, a trusted base to store this inventory data directly from the sensor, you can basically automate more and more processes behind it, as it has been doable before. Basically, in the traditional world, you have the normal order cycle. At first, you got an order, then it gets delivered, then you initiate the payment, you receive, wrong order, invoice has to be there. Okay, basically, then you do the accounting, then you talk to the people who are purchasing everything, and then you're talking to your finance people, is everything okay? Everything has to be done manually. And this is very much slowing down big corporates. So what can be done with a blockchain? With a blockchain, we now have the possibility to use so-called smart contracts. Smart contracts essentially are normal contracts, which are now denoted on a blockchain. Basically, a smart contract is a function that is executed based on trigger signals and cannot be stopped afterwards. So you have a guarantee of execution of such a contract, which means you don't need an additional third party overseeing the process. You don't need anyone validating the steps in between. What now can be done in this whole supply chain business is that I basically put all the data needed on this blockchain and I automate the different steps based on smart contracts, which means I receive my order, or basically my sensor can track that inventory has been consumed or loaded on a truck. Then this can trigger a smart contract, which denotes like the volume of the goods that have been consumed on a delivery receipt, or he creates a respective invoice that works with this. Okay, so what in this point means that now all the processes can be done at the same time. Basically, I can do the accounting together with my payments and can basically knit everything together. So I have a smooth process. And this means for the whole financing processes, which I explained before, that I can, on the one hand, lower the risk involved in this process and the costs. Basically, I lower the risk because I now have a data system which is basically trusted by both parties because it's set up by both parties, and therefore it improves the trust bank give this system, and basically it reduces the risk because you have at every point of the day, you know exactly where your goods are, how much they are worth, how much of them have been already sold, and you can combine all these information together. And on the other hand, you can save costs because basically you don't need these people anymore performing 55 manual steps in order to validate one financing step. So basically you don't need 55 people who type information from a blank sheet they receive from the factory workers stating how much has been filled into the truck. They are typing into the SAP system. This basically can be saved because basically you can connect all these processes together. So how does this work now? If we equip all of these silos with a sensor, the point is I still get my delivery receipts. This is a common principle in the industry. I still get them because it's still measured both at the customer side and at the supplier side. But on the other hand, I can create a so-called proof of existence for all the inventory I have stored in the warehouse. This means I, on the one hand, can track via my sensors a proof that I maybe have 70,800 tons of salt or methionine, whatever. And I can compare these in a constant checking algorithm with the delivery receipts I get. So basically all the time I see my delivery receipts on the one side and I see the constant level of the warehouses. And I can constantly prove which of these delivery receipts have actually been there, with what accuracy the system works, and this adds a lot of transparency. And on the other side, I can not only see it truck-wise, but I can see it silo-wise. So basically this enables many more managerial accounting methods, because I can now track for each single silo how much it has been used, how much material it has been filled in there, with what frequency. So this allows me to program third and forecast algorithms, which basically enables the whole system. So, but what the aim of what AZHOS is doing is not improving the supply chain processes behind it, because there are many other companies already improving supply chain processes with enabling to work without paper, etc., etc. But this is not our goal. Our goal is entirely on the payment side. And basically to bring this additional benefit and also perform the payments in an automated wise, and to make this all possible, we are using a certain construct. This is called Euro on blockchain. Many of you might have heard about the use of Euro on blockchain already. It's the hot topic at many conferences. Many people talk about that. And even big institutions like the European Central Bank are working on their own versions of a digital euro. What we are using has been developed in cooperation with a company in Spain. They're called IO Builders. They're basically former Santander people. And they have developed a method which can basically connect a normal IBAN account with a Ethereum address. Basically, if I have a normal bank account, it can be my private bank account, I can give this account additionally a IBAN address, a Ethereum address, which means that in the end, I can draw funds with a smart contract from a normal IBAN account. I don't want to talk too much about how this system works. But basically, you connect it you still need a bank for this. So this is actually not a stable coin involved in this. And basically, you just connect the existing IBANs at an existing bank with this system. And basically, every time you want to perform a payment or a transaction, you can draw the funds, you can request the funds with the Ethereum address. The bank itself, they move the money from your personal account into an internal omnibus account. Everything that is on the omnibus account gets copied into a digital version of the euro. So they give out euro tokens in the same amount that there are normal euros in the omnibus account. And these tokens contain all the information needed to perform a payment. There is the information denoted on who will receive the money, who sent the money, which bank is involved, etc., 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 and as well like certain parameters of a contract. Which means basically, why do I do all that effort just to connect a Ethereum address to a IBAN address? It is to use these smart contracts to perform payments. What has been done with people sitting in the accounting department or in the purchase department, and these people are basically buying new inventory or selling inventory or typing these invoices into the SAP system, and basically don't need all that manual effort anymore. Because in this case, if I use such a system, I can program a smart contract, which is basically a copy of my normal delivery framework agreement. And that states that every time a ton of material is consumed, a payment for that ton is automatically performed. And basically, if you have the sensors that are measuring the variables, in this case, the inventory levels, this can be very easily done. So on the next step, basically in this whole cash conversion cycle, you basically have this point of delivery and invoice, which is on the one hand provided by the invoice I get, and that is created, and by the sensor that is confirming that this inventory has been drawn out of my warehouse. This can be a trigger point for performing a autonomous payment, which means the whole cycle of purchasing raw materials, producing, delivering, invoicing can now be automated. So basically, if you start with the purchase of raw materials, basically you have maybe a framework supplier, which you have a framework contract with. He delivers you what he's got or what you need every month, and you pay for it. Basically, you can now program a smart contract that is stating that as soon as the material is filled on the silos of your yard, a payment for exactly the sum that is measured by the sensors is sent within 5 minutes. So basically, you can shrink down all the terms of payments from 90 days to 5 minutes. And then you can go further. Basically, this DPO phase from delivery of raw materials and payment of raw materials can be now shrank down. And as well as you can do it with your as suppliers, you can also do it basically if you onboard your suppliers on the system. Basically, from the end of production to the actual payment receipt and the payment by the customer, you can really shrink this down to a matter of minutes. Just because you can tie a trigger signal with real world data, so the inventory levels, to the respective payment. So this whole cycle can be automated, and basically, since you have all the values already stored in a database like SAP, you can also do the accounting together with this. So the whole point about why I was talking about supply chain financing is that normally a customer is not interested in paying instantly. Basically, if you're a customer, you want to keep your terms of payments as long as possible because you want to keep that liquidity. And if you're a supplier, on the other hand, you want your money as fast as possible. But like, even if you give them lower prices, most customers won't agree to shrinking down their terms of payment because they want to use them. So what now can be done is basically integrating a bank or a third institution providing the liquidity for this system, which means that a consumption by a sensor or tracked by a delivery receipt onboarded to the system does not actually trigger the payment by the customer, but basically a financing by the bank. So you can automate the financing and factoring behind all that. So basically, after delivery and invoice, you can use factoring until you get your actual payment receipt. But basically, when you now track your inventory even before it is sent out an invoice to the customer, you can even use pre-financing methods that start with the end of production. Because at the end of production, you can already prove that this specific inventory is going out to this customer because you have the data already stored in SAP. And then you can prove to a bank via your sensor that this material is not like a vision, whatever, but it is really existing. There is a proof. And basically, if you can give that proof, they can even provide pre-financing. Based on that, there are also additional methods for securitizing all these receivables on the go, but this will go too far. Exactly. And like the most interesting part about this whole process is that basically if you give a warehouse or basically a single silo the ability to pay for itself, to order for itself based on trigger signals, and basically to finance itself, this silo from an accounting perspective is now a profit center, which means you know what tons are filled in the silo and what you paid for them. Or if you produce it by yourself, you know what you paid for the production of the material, so you can book this. And on the other hand, you know to whom you're selling this material and at what price. So it's at all the time, you know what's your silo worth. So basically, if you know the tons going in and the tons going out, this is like costs and revenue, you know, a cost and a revenue of a warehouse instrument now, which, okay, on the one hand, gives you many more managerial accounting possibilities, but on the other hand, you can now assign basically an ROI. And if you basically assign an ROI and all these different KPIs to a warehouse instrument, it gets investable by, for example, by other banks, or you can now sell this silo with the underlying delivery relationship to a certain customer who will now do the supply chain financing for you, etc., etc. So there are many possibilities with this. Perfect. Okay. Basically, you could pool them, you can create new securities, etc., etc. So we go the step from enabling industries to also enabling banks or even normal investors to join into the system. Good, but like the most interesting point is how this actually looks like. I'm very sorry for the video. I think it's cool, but it's very old. So what you can see here It's basically our demo version of the stand, our old one. You, on the one hand, have a sensor. This is not the normal sensors we use, but it's a flow meter measuring the inventory. And this is directly the inventory levels. And if a certain threshold is reached, for example, 57 units, whatever, this gets converted into a payment on the Ethereum blockchain. So basically, at this point where the threshold was reached, there was already a payment sent out by the system. So basically, what AZHOS is currently all about and what we are trying to achieve in the industry is to create a ecosystem. Okay, a ecosystem is kind of a startup word, but in this case, it fits pretty well, I guess. A ecosystem connecting like financing institutions, suppliers, and customers. And exactly as I told you, you can enable pre-financing. You have a clear audit trail of your material and a legal binding quality of data. Based on that legal binding quality of data, the companies receive through the blockchain-based IoT system, they can do many, many more business cases out of the data they were already collecting, but the data before was useless. Okay, so what our current state is basically that we are in our MVP phase. So the product is currently finished, and we're trying to roll it out with different companies worldwide. So we are very happy that we have a middle-sized company like Orbit Logistics in our as a strong partner behind ourselves, which basically give us access to a already existing network of sensor infrastructure worldwide. So basically Orbit together with AZHOS has access to sensors, over 6,000 sensors and data points in together over 54 countries. And we are tracking more than 10 million tons over our system right now. Of course, AZHOS is not using these numbers at the moment. This is like the infrastructure we got access to and what we are trying to, where we want to roll out our system. Our current customers or our current project partners in this case are the company Evonik from Essen, they're from specialty chemicals, and the company BASF, which basically will everybody know because it's the biggest chemical company in the world. What we are doing with them right now is basically this autonomous payment system in a first step. So we have connected a supplier in the moment of BASF and BASF itself. And basically for every ton that is consumed by the supplier, we send out €1 to the bank accounts of BASF. So basically we are already sending digital euros based on these sensory signals. So basically this product is really finished, but at this point it scales with the number of connected sensors. And this is what we're working on right now. And this current project phase will go on for additional 8 weeks. And after 8 weeks, we will stop with sending euros and only single euros, and we'll connect it to the normal legacy systems of BASF, sending now the real numbers used in the system. So basically like 350 euros or 1,000 euros a ton. And then the system really gets to use. And what we want to achieve this year, hopefully the current financial crisis won't bring us down. I really hope that. What we are trying to achieve this year is basically roll out the system and connect it in as many industries as possible. So this is not entirely limited to a industry like the chemical industry. We're only in the chemical industry because they're a low-hanging fruit, since we already got all the connections through our partner Orbit Logistics. But actually this works with every industry where huge amounts of goods or huge volumes of goods get transacted in a very high frequency. This could be, for example, the oil industry or even agriculture fits very well, because they have in both cases a very low transparency where my assets are. Exactly. These are our partners in the moment. We're cooperating with the Frankfurt School Blockchain Center here in Frankfurt, and as well the company is Evonik BASF, as I mentioned. Yeah, perfect. I think I'm way over time because they told me it's 25 minutes. Now it's 37. I hope I didn't bore you, and it was an interesting talk to you.